I really should mention that his chair's really squeaky. Welcome to the Price Writer podcast with Catrin Townsend and me, Jeremy Keating. Join us as we explore and discuss the world of insurance-related books, offering our insights, recommendations, and crucially, how to apply this to insurance pricing. Our last two books we had on the podcast were a bit more general, but this one is really insurance focused. It's called Why Insurance Markets Fail and What to Do About It by Liran Einav, Amy Finkelstein, and Ray Fisman, three economists who want the public to understand anti-selection. So, hi, Catrin.
Hi, Jeremy.
Hello. So, what did you think of the book?
Overall, I really enjoyed it. I think it did a really good job of explaining the concept of insurance, and it went into a lot of detail about anti-selection as well. That was really well explained, and it was really accessible, which I enjoyed. I thought overall the book was quite US focused, so if you like that, then you'll probably really enjoy this book. It did spend a lot of time on medical insurance, which isn't so relevant in the UK. But I like that it wasn't political in that criticizes all governments equally and was more about general regulation rather than any particular government's attitude to medical insurance. And I thought it was really fun though. It had lots of examples and anecdotes that weren't insurance related, so you could kind of start to understand where it was going and build up that picture. And it was just a lot of fun. I had this as an audiobook. I enjoyed listening to it. I thought that the chapters were quite long. They were 1 hour. I probably would have broken it up a little bit more just to make it a little bit more bite-sized, but it was perfect when I had a whole hour to really get into it.
Yeah, I listened to the audio version as well. And I thought it was a fantastic explanation of why anti-selection is the driving force between a lot of how insurance is structured. And often people grumble or you hear these startup ideas and like, oh, I'll fix this bit of insurance. But actually, often the reason it's complicated is because of anti-selection. So most people, both in and outside of insurance, probably don't really get it, or at least not to the level that they really ought to. So I think people outside insurance would benefit from knowing more about it, simply because I think the public would appreciate why insurance is how it is. But I think inside insurance, a lot of people don't get it as well. So I did really like the non-insurance examples. There's a really good one about the American Airlines had this like fly anywhere offer. And it was really expensive. So it was like a couple of $100,000, but for the rest of your life, you could fly anywhere. And they did their maths and were like, well, the average customer does X, Y, Z. So if we charge this much for it, we'll make loads of money. And of course, they only sold it to people who had done the maths as well and were like, oh, I have to make this many trips in order to make more from the ticket than I paid out. So they actually then found that they were losing a lot of money on them. And what they did was kept raising the price. And of course, what happened is the customers kept making more and more trips until it became just like ridiculously expensive. And even then, the few people that were buying it for like $1 million were traveling like on 10 flights a week and stuff like that. So it still didn't work. So I thought that was a brilliant example of anti-selection and why it really is a problem.
Yeah, I thought it was fantastic that they've written a book that makes insurance really accessible. And this is a book that's not written by people who work in insurance as well. I mean, they're three economists. So I thought that was wonderful. I don't know, surely everyone in insurance who's been around a little while, surely everyone in insurance understands anti-selection, right?
I don't feel they do, actually. I feel that quite often people think they get it. And then when it comes to it, they actually don't necessarily. I mean, it's driven by asymmetries between the customer and the provider. But any time a customer probably knows more than we do about at least some aspect of their insurance. And I think we forget that. Anytime that a customer suspects they're going to cost more to serve than the insurer charges, we've got an anti-selection problem. And remember, when a customer buys insurance and they think about what price to pay and stuff like that, things that are going on in their heads is whether it's a good deal for them, whether it's cheaper than other providers and so on. So actually, I think it goes on a lot. And I often hear calls inside insurance. So I'll see articles or podcasts where people go, let's do this. And it's like they're getting themselves on the train, the anti-selection train, and it's eventually going to crash. And you'll end up with just the insurance not working anymore.
You've been in insurance for a while. So did anything in this book surprise you?
Yeah, I think the biggest surprise is broccoli. So, yeah. So in the US Supreme Court, so during the Obamacare court cases, they had to rule whether it was acceptable to force people to buy health insurance. So whether mandatory health insurance was legal. And it was argued repeatedly that saying that having to make people buy health insurance is the same as the government saying people have to eat broccoli. And it's just not. It's just not the same. That's just really silly. And in fact, the final rulings, this is mentioned in the book, the final ruling mentions broccoli multiple times, and it mentions anti-selection. I think it was twice. So yeah. So actually, I think people don't know enough about this, and it did really surprise me. So I think often regulators and policymakers either don't know enough about this or don't put it as being a priority. But the problem is that too much anti-selection and the system becomes unsustainable. Now, here's an interesting one. You just wouldn't be able to own a home. You wouldn't be able to start a business, drive a car, if you had to have the financial resources that your insurance replaces for you. So these are really substantial amounts of money that you can buy a policy for a very small amount of money. And I just think that policymakers fail to really appreciate this. And because of that, they can often drive insurance markets into inefficiency and potentially collapse.
Yeah, I don't want to start a regulator pile but I do think that there's definitely a lack of understanding about, okay, you want premiums to be cheaper as a regulator or as a government. Yeah, I mean, everyone wants premiums to be cheaper, even the insurance, really. I mean, insurers don't like charging high prices because it usually that their risk costs are quite high that go along with that. So I often think that, insurers should reduce the premiums. It's like, yeah, and then what? I think all you do is you almost penalize the insurers who are following the rule to the letter, to the spirit. And then the insurers who are maybe kind of a little bit finer aren't getting that anti-selection problem. And it's being pushed onto the insurers who are actually trying to do the right thing in a slightly more straightforward way. So I think that's a real problem. And I think we see quite a bit of that now. There's so much external data and stuff out there, some of which is a little close to the winds, maybe, in terms of the regulation. And I think that is definitely a real issue. And actually, if the regulator's not talking about anti-selection and saying, well, who is going to insure those people? How can we as a regulator ensure that it's not that they're getting insurance, but also, their cost is fair? So I think that's really important. And definitely a big part of what Flood Re has been trying to do. I think Flood Re is a really interesting example. I wish the book had talked a little bit more about Flood Re and about the cat side of things. They did focus a lot on health. And I think that the cat side of this is really interesting because America has similar issues with like Florida homes flooding, for example, people not moving because their insurance will pay, but an anti-selection effect that insurers have to provide some of that insurance.
Yeah, it is a really tricky problem, isn't it? Because you want to be able to provide cover to people, but if you mandate insurers have to provide cover to people who are really, really very likely to claim, then insurers have to charge a price that covers that. And that forces people who don't have these high risk properties out of the market because they can't afford the cover then. So what do you do? What do you do? And it's a real problem. If you don't get this right, you end up with a spiral that eventually removes everyone from the system except the ones that are really, really expensive to provide insurance for.
One of my favorite parts of the book was when they talked a little bit about things that insurers can do to reduce the risk or that customers can do to reduce their own risk. So things like co-pays or initial exclusion periods for health insurance or dental insurance, they talked about that example a little bit. And the idea that if it's non-emergency, you'll probably push it into the following year. And then in the intervening time, you'll increase your cover. So, you can do things like that. But they said, but if you can create a system whereby people are incentivized not to do that and actually reduce the risk themselves, then that's obviously the most ideal situation, because then you actually are reducing the overall amount of risk in society, which is very important. I think we see a lot of that with car manufacturers at the moment, right? In the UK, they actually are the ones or the key people who can reduce the overall amount of risk, particularly when it comes to the theft and also things like the car parts inflation. They're the ones who can really help to control that. So that discussion around what insurers can build into their T's and C's to help control their costs, but in a way that is fair and doesn't penalize, I'm going to say, the good customers. I thought that was my favorite part of the book. What about you?
Yeah, I think similar. It is really interesting, those points around how do you make a system work? Because if you start mandating how insurance has to function, it slowly chips away at actually the underlying kind of principles of it. I really like the discussion of unemployment insurance. And this is why I say I don't think people really get anti-selection, even in insurance. So everyone that was involved in setting this product into the world was like an insurance expert, and people were discussing how the product was too profitable. And then it turned into a disaster and ended up being pulled because it was just paying out too much. So actually, I think people, even insiders, would very much benefit from this book.
I think the question of fair value is really interesting. Like, you often hear people say, oh, insurance costs me, however many hundreds of pounds a month, and I don't get them back. And therefore it's too expensive. And I think that there is a misunderstanding of what insurance is selling. It's not that you will definitely get money back within the however many years you have insurance for. We're selling you security that if something did happen, then you would be covered. So I think more understanding of we're selling security. I think actually insurers could do really. I'm sure some marketing person could do a really good campaign about that somehow. I think the fair value assessments for property insurance, in particular properties that are exposed to cats, is actually really interesting, because I have to look more into it. But I think it is done on an annual basis. There's no idea that if your home has a 1 in 100-year flood risk, that actually that risk still has to be priced into your annual cost, even if it's not expected to happen very frequently at all. So I think that there's some things there that's more complicated than the fair value tag necessarily suggests. There is a lot of complexity on the particularly volatile events.
Yeah, I think so. So my home insurance costs me about 1/2000th the value of my house a year. Like, it's a micro cost compared to the ownership of my house. And I'm like, it's fair value. That's really, really, really good value. What we should be saying is, wow, that is incredibly good value. We should be so proud that we deliver a product for such low costs. And, I'm kind of annoyed about people not appreciating how fantastic value it actually is.
I really like the lens of the UK student loan being an insurance scheme. I'd never thought of it that way before. They didn't specifically talk about the UK student loan scheme, but they talked about American equivalents, where some colleges offer this. So you pay back a percentage of your salary in return for tuition. That was a totally new way of thinking about it for me. And I really enjoyed that. It really helped me reframe it and understand why the student loan system in the UK is kind of failing. I don't think that's too controversial to say. Because wealthy families can and do just pay the tuition or the loan amounts straight after graduation. And therefore their kids then aren't paying that proportion of their income We know that wealthy families are more likely to have kids who have high incomes. And therefore, that extra interest, which otherwise would go back into the pool and help finance it, is actually not going back in because they're opting out because of anti-selection. And so that for me was a really it just was a light bulb moment for me and kind of understanding why that's not quite working. And anyone who is involved with setting student loan policy, I feel like this would be the book I definitely want them to hear about because, like I say, that was a brand new insight for me.
I feel like it's really useful all over the place. And I mean, something that I think they make really nicely clear as well is that if you move to a more mutualized system, you just have winners and losers from that. And the winners are typically the wealthy. So they end up with their properties being subsidized by everyone else because if everyone pays kind of set amounts for their insurance, even if you link it to the sum insured, it's still beneficial for the wealthy and not. So it's interesting. Often people are like, oh, let's mutualize. That would be better for worse off people. But actually, it's often them that see their premiums rise because of it. And they're the ones that are forced out of the system. They're the ones that can't get cover anymore. So in that way, it's actually really unfair. So yeah, I've talked about this many a time, how people see like mutualization as being fair, but in fact, it's actually really unfair. Would you recommend this book, Catrin?
Yeah, I thought it was fun. I would recommend it, particularly if you're new to insurance or you're just interested in finding out more about how insurance links to society and drives society. Um, I mean, yeah, so I would recommend this to anyone new to insurance or if you don't work in insurance at all. I mean, but if you don't work in insurance, please can you let me know? Get in touch because I would be fascinated to hear how you found us because we're normally in the insurance nerds corner of the internet. So if I was you, please do let me know. But I don't know if I'd recommend this book to more experienced insurance professionals unless you're in a really regulatory type role, just because like everyone's busy and I don't know if this book is necessarily going to impact your day to day as an insurance pricing professional.
Do you think it's a good refresher on a lot of stuff, though?
Yeah. Yeah, I think that that's definitely true. I guess I'm just coming at it with, you know, it's a really good book, but it's potentially not going to change the way you work every single day. And I know time is so precious that a lot of people, let's be honest, like a lot of people aren't going to read that many nonfiction books, particularly about insurance this year.
Yeah, I
So,
guess.
it really depends what kind of skill you're looking to pick up. So, but if you do just want to refresh it, if you're just feeling a bit tired of insurance and like, oh, what am I doing? I think this book actually is really fun and engaging. It's gonna probably bring back the feeling of purpose to your work. So I would recommend it, if you're in that situation. What about you?
Yeah, I guess I agree, actually. I really liked it. I thought it was really fun. I genuinely thought, especially for an insurance book, it's a fun read. The anecdotes are quite good, and the situations people and companies have got into because of like information asymmetries is really fascinating. And I have myself been like, why is dental insurance just so rubbish? I would never buy dental insurance because it's so rubbish. But it takes you through really nicely. And it was a reminder to me. I was like, oh, yeah, that's why it's rubbish. And that totally makes sense because the people that buy it all know that there's stuff they want done to their teeth. So, yeah, so in that way, I thought it was really good. I would definitely recommend it to anyone involved in insurance policy and regulators. Do I think it's worthwhile if you're sort of maybe a manager in a pricing team? Probably not, but I would also say I found it a fun read as books go. So, if you think about what to do for CPD and things, definitely give it a try. The audio book's available, which isn't that common for insurance books as well. So you can just listen to it. I think I did really like it actually. And I would recommend it, but I wouldn't necessarily say if you're like 10 years into your career that you'll learn a lot that you didn't know from it. Maybe that's what I'm thinking.
Okay, good. So kind of we recommend it to specific people out there.
Yeah. Yeah. I think if you're in a pricing team, you're a manager and you want an insurance read, It's a refresh. It's a good one because it's quite a fun read. If you're new in, yeah, I think it's a good one to read to understand how things work, why they work like they do. And if you're thinking of a startup business, if you're like, what I think the world really needs is, and actually it's a genuine example from the book. So what the world really needs is divorce insurance. This is a brilliant book for explaining to you why it's not going to work.
And we're nearing the end of June. Has there been a standout book for you this quarter?
Well, do you know, I've had quite a run of disappointing non-fiction books this quarter, actually. But there is one. There's one that's been very good, which is Ultra Processed People. So it's not insurance related, but it's about the food industry, and it is very good. Like it's written in a passionate but non-preachy way, and it really makes you think about is the aims of the food industry, because spoiler alert, it's not to provide you with a good diet. So yeah, so I thought that was really good. Although another spoiler, if you really like ice cream, maybe give it a miss, because I'm off ice cream and I used to really enjoy it.
I think I gave that one 5 stars last year as well. I loved that book. I think I read the whole thing about weekends, and I went back and reread it again, different section.
Wow.
That was I thought it was so interesting. There was so much in there that I was like, that's like gross and so
Yeah.
informative at the same time. There was something about
Interesting.
coal tar butter made with coal tar, marketing
Yeah.
coal tar, and I thought there's so much in there. Anyway, I know that's not an insurance book. Insurance people probably won't get anything out of that book other than will be absolutely horrified with the food that you sometimes eat. But I thought it was a really good book as well.
I agree. I totally agree. And I do wonder if you work in commercial insurance and you insure the food industry at all, I think actually it is really worth a read.
We'll be back next time talking about not one, but 3 award-winning books. Jeremy, you'll be sharing some takeaways for insurance professionals. Tell us about it.
Yeah, so it'll be a bit more quick fire. So I'm going to try not to talk for like 20 minutes or half an hour about each one. We're going to be fast, fast, fast. But yeah, so it's 3 books. They all won an independent press award, just like Pricewriter did. So they're all the recipients of a statuette, just like that one. So it's fantastic. I thought when I was there in New York and I met the authors of some of these books, I thought to myself, oh, I should really talk about them and think about how they relate to insurance pricing and what we can get from those books. So I chose 3. So we're going to have Passion Struck, we're going to have Hiring Veterans, and we'll have the Connection Playbook. So I'm very much looking forward to that. So I'm going to be talking about those 3 books and what we can learn about insurance pricing from them.
Thanks for joining us. We'll see you next time. Pricewriters is a training and education company focused on insurance pricing. Find out more about our engaging training, graduate schemes, and workshops by visiting pricewriters.com.